The same catalysts rule market sentiment and determine global trends. Expectations of the Fed's aggressive policy moves and the global recession fears. A new culprit for market volatility is political jitters in the UK. The new Prime Minister apologized in her televised address to the Britons, and the government revised the fiscal plan. One thing is clear: the US dollar is benefiting from such turbulence. The greenback is winning favor with investors, even among other safe haven assets. And now let's discuss what other events are worthy of traders' attention in the second half of the trading week. In the early Asian session on Thursday, market participants are alert to the data on Australia's labour market. The employment data is likely to prove the resilience of the Australian economy. It will enable the Reserve Bank of Australia to continue raising interest rates as a countermeasure against high inflation. At the previous policy meeting, the central bank refrained from an aggressive rate hike. Recently, the monetary authorities assured market participants that the struggle against inflation remains high on its agenda, so the regulator dropped a hint about more aggressive action. Under such conditions, signs of a healthy Australian labour market could revive demand for the Australian dollar. The US labour market is also on a sound footing, which enables the Federal Reserve to go ahead with its crusade against high inflation. Nevertheless, in the weekly update posted by the US Labor Department on Thursday, we are likely to see signs of a weakness in the labor market. The number of initial unemployment claims rose slightly to 230,000 last week. Besides, analysts pinpointed an increase in the 4-week moving average, and that this does not disturb the US dollar's rally so far. However, a lot of experts raise questions about the signs of an actual recession, but not just a technical recession in the US economy. On Thursday, market participants will be able to judge on the changes in the existing housing market in the United States. Existing home sales are expected to shrink by 0.8% in September, following a 0.4% fall in the previous months. Such a dynamic indicates waning consumer activity, the driving force of the US economy. Due to rising borrowing costs, consumers are unwilling to purchase something with a high price tag, for example, property. Inflation is a thorny issue for the Japanese economy. Inflation has been a major headache for the monetary authorities. To be more accurate, Japan has been fighting against deflation or falling consumer prices by pushing down economic growth. The Bank of Japan introduced negative interest rates aiming to tackle deflation. Nowadays, Japan is dealing with the opposite situation. Being relevant on energy imports, Japan is also suffering high inflation, which accelerated to 3% in August, and the national CPI is expected to surge to 3.2% in September. Curiously, the Bank of Japan pursues the same ultra-loose monetary policy, and traders do not welcome the dovish rhetoric. The yen has been extending its weakness for a few months straight. It has slumped to the lowest levels in the last 32 years. And in our daily videos, we are closely watching the dynamics of the dollar-yen pair and trying to figure out the underlying stance of the Japanese government and the monetary authorities. And it's quite a puzzle. We invite you to subscribe to our channel and monitor developments in financial markets. The economic data from the UK might catch investors off guard. Market participants are focused on announcements by the Bank of England, and the regulator is carrying on with its emergency bond buying, making efforts to quell the havoc in the domestic financial sector. Meanwhile, macroeconomic data has been providing evidence of a looming recession. On a Friday, the market will get to know a report on the UK retail sales, which are expected to contract again in September, against the background of high interest rates and soaring inflation. Consumption troubles are also detected in Canada. Nevertheless, analysts suppose that retail sales could have recovered in August following a sharp decrease in July. Perhaps the actual data might be a bit stronger than expected, and for this reason the USD CAD pair might correct downwards in the favor of the Canadian dollar. You have watched the Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. I wish you profitable deals and waiting for you on our channel in a few hours. See you!